Hello everyone and welcome to another video in our series of Texas Instrument Calculator and how to use the BA2 Plus calculator. In this series we're going to cover a variety of topics on how to use the BA2 Plus calculator for financial or business math.
In this video of the BA2 Plus analysis, we're going to be looking at the break-even analysis. So the first thing we're going to look at is what's break-even analysis, the terms, a couple of formulas to understand what we're looking for. Then we're going to look at how do we find all of this using the calculator. So break-even analysis, of here the term, the company broke even. So what does it mean to break even? It means there was no loss nor profit, which means the total revenue equals the total cost. So if the total revenue exceeds the total cost, there's a profit. If the total revenue is less than the total cost, there is a loss. If they're the same, they say they broke even. There was no loss nor profit. So in terms of break-even analysis, there are different ways to do it. One of them is graphically. We graph both the fixed cost, the total cost, which is fixed plus variable cost, and of course, the total revenue. So the point here where the total revenue and total cost intersect, that's the break-even point. So if you look at this part over here, the cost line is above the revenue line. That's why it's a loss. It's in red. After the break-even point, the revenue becomes above the cost. This is where there's a profit. At this point, the company is breaking even. This is the number of items to break even. This is the dollar value. So it might be if they sell 1,000 items, which is worth, for example, $50,000, they're breaking even. Once they sell more than 1,000 items, they would be making profit. If they sell less than 1,000 items, they would be making a loss or occurring a loss occur. Okay, so analysis is lots of things. We're going to focus on how do we find the break-even point, how do I find how many items they have to sell to get a profit of this amount, and so on. Okay, so we explained this in terms of what they have to do. So I'm not going to spend lots of time on it because our concern here is the calculator. How do we find this? Using the calculator. This is explaining the difference between when the total cost equal, less than, or greater than the total revenue, where there is a loss, profit, or they're breaking even. So let's jump right away to the calculator. The worksheet for break even is above the 6 key. So we have to press second, 6, or second break even. It's going to ask us for a couple of things. Of course, we have to clear work. It's going to ask us for the fixed cost. It's going to ask us for the variable cost, selling price per unit. What's the selling price per unit? This is the profit or the net income. And this is the quantity, the break-even point. So depending on what we're looking for, if we're looking at break-even, how many items they have to sell to break even, we're going to enter the fixed cost, variable cost, selling price. We're going to enter the profit as 0 because this is where the break-even, there is no profit, and it will give us the quantity required. If I'm looking for what's the profit if they sell 2,000 items, I will enter everything except the profit. So I will enter 2,000 here for the quantity to find the profit, and so on. What's the selling price to make a profit of $10,000 if they sell 50,000 items or whatever? So I can find whatever I want from these values, not only the quantity or the break-even point. Similar to other worksheets, enter everything required, leave the one you're looking for till the end. When you press CPT, it will give you the answer. So let's look at example right away. A company sells an item for $60. That's the selling price. Their fixed costs are $2,000 and variable cost per unit is $15. Calculate the number of units needed to be produced and sold to break even. Just looking for the break even point. So we're going to press second break even and we're going to enter everything we're looking for. That's the fixed cost, selling price, and the variable cost. Break even means profit of zero. So once I get to break even, all I have to do is press CPT and it's going to give me the quantity needed. So let's round it. They have to sell 45 items to break even. If they sell less than 45 items, they're making a loss. If they sell more, they're making a profit. So let's grab our calculator and see how we enter this on the calculator. Okay, so here we go. You can see that the break even is here above the 6 button. So we're going to press second 6 to bring the break even point. We're going to clear work to make sure nothing is stored there. So fixed cost is 2,000. We're going to press 2,000 and don't forget to press enter. Press down. Variable cost $15 per unit. Press enter. Selling price $60 per unit. Press enter. Profit is 0, so I'm going to leave it 0. Go down to the quantity and press CPT. And it will give me the break even point. $44 items or 45 if we round. That's the number of quantity. If I'm looking at dollar value, how much they should have the revenue to break even, all I have to do is multiply the 45 by the selling price, and that's the break even in dollar value. $2,700. They will break even. Less than that, it's a loss. More than that, it's a profit. So it's that simple to enter the values. As I said, keep the one missing till the end and press CPT on it. Okay, let's look at another example. Manufacturing furniture, fixed cost 3,000, variable cost 40, selling price 50. Break even, volume, and revenue per month. So I'm going to enter fixed cost at 3,000, variable cost $40, selling price $50. Profit 0 because we're looking for the break even point, and it should give us the quantity, 300 units to break even. So let's clear work. Okay, 3,000 is the fixed cost. So one more time, that's a 3,000. Enter. Variable cost is $40 per unit. Enter. Selling price $50. Enter. Profit is 0. 300 units to break even. That's the first part. To break even, they have to sell 300 units. They said, what's the revenue per month? So we're going to multiply by the selling price, which is $15,000. So the break-even point is either you sell 300 units or make a revenue of $15,000 to break even. Okay, let's look at the second part. If he increases his selling price by 10%, what's the new break-even point? So let's assume that Sam here looks at the break-even point, 300 units. That's too much. He decided to increase the selling price by 10%. What's the new break-even point? 10% isn't that much. What's 10% of $50? $5. So the new selling price is 55. So all we have to do is go back to our break-even points. I don't have to change the fixed cost. I don't have to change the variable cost. All I have to change is the selling price to $55. Still, profit is 0. Let's see What's the new break-even point? It should be less than 300 units because we increased the selling price. Look at that. Increasing the selling price by $5 or 10% dropped the break-even point from 300 units to 200 units. So you can see I don't have to clear the work. All I have to do is change the price, the selling price, go find the new break-even point. Okay, so that's using the formula. We're not looking at the formula. Using the calculator, that's the only thing I need to change. Okay, third part. If he reduces his fixed cost by $250 with no changes to the variable cost and selling price, what's the new break-even volume per month? So we're going to go back to the calculator, and they said no change, which means forget about part one. Let's bring it back to $50. All we have to do is change the fixed cost. Instead of 3,000, he reduced it by 250. So now it's 2,750. That's all what I have to change. Fixed variable cost is still $40 per unit. The price still $50 per unit. What's the new? 275 units. So increasing the selling price by 5% decreased the break-even point by 100 units, where decreasing the the fixed cost by $250 only reduced the break-even point by only 25 units. Okay, so that's what we just did. Change the price back to 50 and the fixed cost back to change the fixed cost to 2,750. Okay, if his fixed cost increased by 5%, and he decreases his selling price by 10%, calculate his new break-even volume per month if there were no changes to the variable cost. So same idea, we're going to increase the fixed cost by 5%. 5% of 3,000. And we're going to decrease the selling price by 10%. 10% of $50 is 45. So the new selling price is 45. And the fixed cost increased by 5%. 5% of 3,000 is 150. So that's what we have to change in order to get the new price. Okay, so fixed cost now is 3,150. There is no change to the variable cost, and the price is $45 now. Still, break-even point. Now, of course, here we increase the fixed cost, we decrease the selling price, we expect the break-even point to jump above 300. 630 items they have to sell to break even, because the price is $45, just $5 more than the variable cost, plus we increased the fixed cost. Okay, 630 items. So as I said, when it comes to the calculator, all you have to do is enter everything and then leave what you're looking for till the end. So let's assume the question asked for, let's return this back to 3,000. And this is 40 and this is 50. Let's assume they asked for how many items they have to sell to make a profit of $10,000. So here I'm going to enter $10,000, right? And I'm going to go and check the CPT. To make a profit of $10,000, they have to sell 1,300 units. But here I'm still looking for the units. What if I'm looking for the profit? If they said, for example, if they sell 500 units, what's the profit they're going to make? So I'm going to enter the 500 units, go back to profit, and press CPT. They're going to make $2,000 in profit. $2,000 in profit. Okay? You might be looking for the selling price. They said, for example, if they want to make $3,000 in profit, okay, and the selling price, or they sold 600 units. Sorry, let's clear this. Okay, they say what the selling price should be if they sell 600 units and made a profit of $3,000. We can go and CPT the selling price. If I'm looking for the variable cost, I can CPT the variable cost. Okay, so leave what you're looking for till the end, enter everything else, press the CPT.
Thank you for watching, and don't forget to subscribe to my channel for more videos on statistics using SPSS and Excel, among other things.